Hello friends, good evening. This is Sriram and today we are here to discuss about the changes in the syllabus for CA Final SFM paper. And I have with me here the first chapter of CA Final SFM. See, broadly what has happened is they have added one chapter, Advanced Capital Budgeting. Other than that, all the chapters are same. I will now take you through chapter by chapter, showcase to you what is the old study material versus what is the new study material. What I have here on screen, which is in this, some kind of a beige, yellowish color shade, is the new syllabus study material. And our old syllabus study material, which is in this color of purple, kind of lavender kind of a shade. So let us now have a look at both old and new syllabus study materials one by one, so that it is easier for us to compare and see what happens. And I'm going through this chapter by chapter. Some of you, I would, whoever is planning to write in May 24 onwards, it is be really helpful for you if you can pay attention. Now you look at this. First, let us look at old syllabus. They've talked about strategic financial decision making. There are about 5 topics here, right? Financial planning, interface, and balancing goals. Now you come to the new material. They've added one thing here called advanced role of CFO in various matters, including value creation. Other than that, rest of it actually looks pretty much similar. We can actually go page by page, and you can actually see clear and realistic strategy. Here also they're talking about clear and realistic strategy, so on and so forth. In fact, there is if you see the page count right on the top here, this first chapter was 10 pages earlier. Now it is about 12 pages. They've probably added a couple of more, small points. I don't see any major change in this. You see financing decision, investment decision, dividend decision. So this is the new one where I am now, and this is the old one. Pretty much similar. Even the tables look very much similar, right? So beyond this, in first chapter, I don't see a lot of changes other than the addition of that one new particular aspect that they have done. Let us skim through rest of the pages also. Balancing goals, we have reached here also. Balancing goals here, that is the 6th topic. And then sustainable growth rate. Then here also sustainable growth rate. Yeah, pretty much that only. There is nothing much beyond this. What is our sustainable Mitsubishi? In fact, they have not even changed the case study that they have, right? So there is this chapter is basically old wine, new bottle. There is nothing much going on in this chapter. So first chapter, not much of a change. So I'm going to close the first chapter and next move to the second chapter. What is the second chapter? Second chapter is risk management, if I'm not wrong. Let me open the risk management. Yeah, here it is, risk management. This is the old syllabus. And now let me come to the new syllabus, risk management. Yeah, here it is. Yeah, so here is the risk management of new syllabus. Let us see what is there in new syllabus. Identification of types of risk, evaluation of risk, VAR, evaluation of appropriate method, and what is there in the new syllabus? This is new syllabus, I'm sorry. What is there in the old syllabus? Old syllabus is, I think I'll have to move to, yeah, old syllabus is here. No, yeah, here is old syllabus. It is about 8 pages. New syllabus is about 10 pages. Let us see what have they added. First top 4 synopsis is same. Types of risk and all that look same. Compliance risk, operational risk, so on and so forth. Counterparty risk, political risk, all this is same. Currency risk, liquidity risk, evaluation of financial risk. Yes, this all looks the same. VAR, features of VAR, application of VAR, appropriate methods, features of VAR, appropriate methods. Yeah, so till here it is same. Then political risk, interest rate risk, currency risk. Yeah, this is what is there in the old syllabus versus the new syllabus. Now, test your knowledge. Have they added any question? Which is why some pages seem to have increased. So answer to practical questions. Yeah, see, they've added probably, there's only one question here. No, there's actually no change. They've, in fact, it is same. There is no questions also asked. I mean, it is the same question, 23.7 to 23.72. So there's absolutely no change. So this is absolutely old wine, not even new bottle. This is old bottle only. Okay, so I'm closing this particular chapter called risk management. There's absolutely no change. Now let us go to the third chapter. Third chapter is, if I'm not wrong, security analysis. Security analysis is a 40 pages in the new syllabus. Let us see what is it in the old syllabus. Chapter 3, security analysis, is 37 pages. So approximately 3 pages have increased. Let me pull this out. Where is the old syllabus, new syllabus? Yeah, here is the new syllabus one. Security analysis is 4th chapter. Okay, so please note here, there is this 4th chapter in the new syllabus and it is 3rd chapter in the old syllabus. The reason is in new syllabus, they have added a new chapter called advanced capital budgeting. We'll get to that. But first, let us compare these two chapters, security analysis, what changes actually happened. 40 pages versus 37 pages. I will scroll through quickly. I'll not spend too much time because we have 14 odd chapters. Let us see what all they have taught. Fundamental analysis, technical analysis, efficient market, equity research, and tools available. Fundamental, technical, here efficient market hypothesis, and here they have something called as equity research and tools available. So those of you who have attended my classes, I've told you, I've shared with you equity research reports. I've told you that I've worked in equity research earlier. And what is the, what are the tools that we use? How do we take data and all of that? I've actually gone through in depth. Right. So let us just directly come to that because I don't see any other major change in this particular chapter. It is pretty much the same. There may be 1 or 2 paragraphs here and there that might have changed, but all the charts also actually look pretty much similar. Okay. So you see this chart, the example is also pretty much similar. So there's not much that they've done here in this particular chapter. Price patterns, yeah. Head and shoulder, all this same stuff. EMA, same stuff. Have they launched anything new? No, they've not added anything new. It is pretty much same stuff. And yeah, empirical evidence and all that is same. Now here they've come to something called as equity research. This is completely new. It is not there in the old material. Old material ends at irrational behavior and so on and so forth. Yeah, so this is where it ends, the old material. New material starts here. Equity research and tools available. So they've talked about the Bloomberg, Market XLX, Stockopedia, and a bunch of them. So Bloomberg is something what people use, but I'm not sure of all this Benzinga, Market XLS, and all that. Probably some people may be using. Yes, some of them, yes, we do use. And beyond that, have they given anything else? I think they have 3 questions. Yeah, here also I think they have the same questions. 1, 2 questions. Yeah. That's all. I don't think there's any change in this. Answer is also 13.832. Let us check if that's the same answer. Yeah, 13.832, 13.832. There is absolutely no change. It is just that they've added a notes page and equity research. So chapter 3 of old syllabus versus chapter 4 of new syllabus, absolutely no difference other than for the fact that they've added something called as equity research tools. But that also is very, very basic. Now, let us come to chapter 3, which is what they've introduced afresh in the new syllabus, which is advanced capital budgeting. It's an 86-page chapter. So there is something new. Okay. And here, what are they discussing about? Current trends in capital budgeting, risk, internal, external factors, methods of incorporating risk, adjusted present value, optimum replacement cycle. See, so some of these, right, you were earlier studying them in old syllabus, financial management, to certain extent, right? Let us see what all is there. Determine NPV, salvage value, tax rate, so on and so forth. This is all, this is all pretty simple stuff. There was nothing really fancy here. See, you also should remember that in old syllabus, they have merged, in new syllabus, they have merged in intermediate FM plus SM, right? So, which is why probably they may have, I don't know. We'll have to go through that particular thing in detail. If they've made any changes to the FM syllabus, that will come to it later. But I think some parts of the FM syllabus have been moved here, government policies, then in fact, dealing with risk. How do you manage risk? This looks like a lot of theory, risk. See, this was to quite an extent was there in the old syllabus, CA intermediate, financial management chapter, where they were using probability and so on and so forth, expected net present value. All this was there in the old syllabus, CA foundation, CA intermediate financial management, but I don't think the variance part was there. But then, of course, that's a small aspect as well. Now, certainty equivalent, that was there in the and risk adjusted rate, certainty equivalent, the sensitivity analysis. All this were discussed in the old syllabus, CA intermediate FM. So those of you who have passed inter and you're going to actually write the CA final in the new syllabus, actually it's going to be to a certain extent repetition. It's not anyway, this particular chapter is not so difficult. Now this decision tree is something new. This is not there in old syllabus intermediate material, but there's nothing very fancy. This is, this is like our, options chapter where, you have multiple nodes and from there multiple, places where the decision go. So that is what it is. I don't think it is something very, very difficult or fancy. It can be handled. Adjusted present value. This I actually discussed, in fact, I remember discussing with the intermediate faculty also how this is done. So I don't think, and we've done this in final also. I think international financial management existing syllabus, we've done something. Now let us see how many illustrations are there in this. They have given about 26, 27. Yeah, 27 illustrations plus I think another 13, 14 illustrations as part of the syllabus, as part of the explanations. Yeah, 13. 13 plus 27, 40 odd. I think this adds a certain amount of depth to the final material. But I don't think per se this is difficult. This chapter is not difficult. Of course, the way ICAI is, they can make anything confusing and convoluted. But other than that, I don't think this is a particularly difficult chapter. This is a fairly simple chapter. I don't see anyone actually unnecessarily struggling for this particular chapter because a lot of you would have done something like this very similar in CA Intermediate Financial Management. So I'm closing this. Now let us come to the next chapter, which is Security Valuation, which is chapter 5. Whereas in old syllabus, it would be ideally be chapter 4, if I'm not wrong. Yes, chapter 4, Security Valuation. Now let us see, it's about 59 pages in old syllabus and about 64 pages in new syllabus. So I think very little has been added. Overview of valuation, return concept, discount rate, equity, role and precautions, and so on. Valuation of preference shares and debentures, COC. So here they have added 2 new things. Roles and responsibilities of values and precautions need to be taken by valuer. Other than that, everything else looks pretty much similar. The discount rate, everything is same. I mean, I don't see any difference in this. Let us come down further and see what all is there. Overview, return concept, this is all pretty much the same. Cash flows is pretty much the same. Equity risk return. I'll actually take you through the old and new comparison. You can actually, where are we? This is number 6, right? Valuation of equity shares. You see here, valuation of equity shares. It is pretty much the same. There is actually no change also. Page numbers are also pretty much the same. So I don't think they've changed much here. Enterprise value, they've explained it here. Same thing. I think we had something around enterprise value. No, enterprise value is not given in detail, or was it? Let me just check. 6.5 is enterprise value. Yeah, it is same. It is same. So this valuation of rights, preference shares, bonds. Yes, it is pretty much the same. There is absolutely no difference here till I think term structure also is pretty much the same. There's no difference here. 0 coupon bond, duration, certificate of deposit, commercial paper, then roles are here. So they have added a couple of points here where, I think it ended at repo, whereas repo and reverse repo, whereas the new syllabus has something on role of valuers because I think, there is this IBBI, which is there, right? Registered valuer. So probably I think in order to bring in some, registered values and valuation rules. So they, in order to get some kind of, idea for students, they have brought in this particular 2-3 pages. But I don't think there is anything fancy in this. Precaution, this is pretty much theory, guys. So there's nothing. Let us see the number of questions. They have now about 25, 28, 30. They have about 31 questions. They may have made some corrections. This is the first initial look I'm having. So I do not know if they have corrected some questions because they have a bad habit of, having wrong answers for a lot of questions. So if you look at this, the same question count is also 31. There's absolutely no change in this particular chapter other than the 2 theory aspects of, registered values and so on. So this again, old wine, new bottle, except for the 4 or 5 pages on registered valuer, there is nothing really fancy here. Next let us look at this chapter called portfolio valuation. Portfolio management. Portfolio management is chapter 5 in old syllabus. And let us look at it in new syllabus. It should be ideally, I think, chapter 6. Yeah. So this is about 122 pages here and 121. Oh, come on, man. So there's absolutely no change here as well. You can actually look at it. Activities in portfolio management, types of risk, risk and return, portfolio 3, alternative investment strategies. And hang on, there's absolutely no. Last one is fixed income and alternative investment strategies. That's all. Fixed income and alternative investment avenues. They've just changed the name. I don't think there's anything that they've changed here. Absolutely the same. It doesn't appear to have had any further. Let me, scroll through it quickly, and let us scroll through the old syllabus also quickly. So you look at it, it is pretty much the same thing, same stuff. You can actually go to page 44, required return as per CAPM. 15%, 15%. No, I think this is a different question. This question is illustration 8, and we are, here. You see here 17.5, 12, and 15, and we are here at 17.5, 12, and 15. So it is pretty much the same. They have not made any major change here. Let us scroll down further. Is there any change? This very bad one particular topic. I was hoping they would have removed it. Sharp's optimal portfolio. This is a useless thing. They've never asked it, but this is something that is, very. I would actually call it idiotic to teach it because it's way too large, and I don't see any reason why or how anyone will even remember this. Anyway, coming back to the next part, they have explained portfolio revision rebalancing, which is 54. Yeah, so it is pretty much the same thing. Now let us see where did they end. Alternative investment avenues. Yeah, this was the last topic, 16. So alternative investment policies. Yeah, so I think it is the same thing there. They've just changed the name, nomenclature. So I don't think there is anything fundamentally different here. Sovereign gold bonds they've added, and they've added about so I think they've added 2-3 things: sovereign gold bonds, gold bars, how gold is a good investment, and all of that. I don't think we had that here. It was directly real estate. So I think distressed security, so on and so forth. So yeah, so I don't think there is anything fancy here in this particular chapter. Let us see the number of questions that they've added. Old syllabus, the question count, if I'm not wrong, was how much? 41. So let us see new syllabus. How much is it? It is about 41, 42. They've added one question. They've added just one question. I think this one exam related question. So I don't think there's going to be any difficulty here. So portfolios management chapter, there's absolutely no change other than few small things and one extra question. They may have changed the questions. So some answers are incorrect, as I said. So this again is old wine, new bottle, which is what I was alluding to in my LinkedIn post and all of that, or Twitter post, tweets rather, where I was saying that I just hope that they don't make it old wine, new bottle. Yeah. So after that, let us come to securitization. This is one chapter. I don't think they would have changed anything. I mean, there are obviously a bunch of changes in securitization rules by the RBI, but I'm not sure how much they would have changed. So they have pricing of securitization instruments, risks in securitization, and tokenization. Yeah. So they've added 2 points here: risks and tokenization. So let us have a look at it. What is this? Features, benefits, angle? This is all pretty much the same, guys. There's absolutely nothing. I actually remember the chapter: primary participant, secondary participant, same stuff, secondary participant, so on and so forth. Mechanism, repayment, credit rating. So they've actually stuck to the same images as well. Problems. And what else? Securitization instruments and strip securities. They have explained that. Pricing. Yeah. So I think we had pricing also. Securitization, pay through, strips, pricing. And then securitization in India as a chapter. Risks. Yeah. Now they've added something called as risks. So this is risks that is available. And then tokenization. Yeah. Tokenization was not there. So they have added tokenization and applications of blockchain. So this is something related to blockchain. This is good. By the way, this is good. And this securitization in India, they've, I think, added a couple of more topics, or rather a couple of more paragraphs. But risks and tokenization, securitization, blockchain, this is very good. Those of you who have taken a blockchain course would have understood. But there's nothing fancy, guys. This is very, very little. It is just pure theory. This will add some theory questions to you, but I don't see any reason why there should be any difficulty for you guys. Okay. So I'm closing this particular chapter on securitization. Let us move to the next one, which is chapter 7. Which is mutual funds, if I'm not wrong. Yes. Mutual funds as per old syllabus. And let us see what is there in mutual funds as per new syllabus. Yeah. So let us come to mutual funds. There's 54 pages here and 48 pages here. Very little, guys. So drawbacks, terms associated, drawbacks and terms. evaluation of mutual funds, role of fund manager, and role of FI. So I think they've added these three new aspects, evaluation, classification, types. So they didn't have evolution. So I think they moved that out from the old syllabus. Let us see what they have added. Should we invest in stocks or mutual funds? Is that there? Yeah, that is there. It is pretty much the same stuff. So let us see if they've added anything new. What is it that they've added? Thematic, arbitrage, all of this is same. Fixed maturity plans, drawbacks, terms, entry and exit load. This is all new syllabus, guys. Okay, expense ratio, tracking error, all this we discussed. Evaluation. So this is a new topic, quantitative parameters, risk adjust method, benchmarks, comparison across cycles, financial measures, qualitative method. It's roles of fund manager, actively managed funds. What is the fund manager supposed to do? Role of FIS in mutual fund. What do FIS do? And bunch of stuff. Again, this is theory. There is absolutely no change. And let us see what are the questions that we have. We have in the new syllabus total question count of how much? About 24. Let us see how much do we have here in the old syllabus. Old syllabus, I think it should be pretty much there. I don't see any reason. 24, ANP 25. So Sunidhi is the last one. So I think probably they removed one illustration. That's fine. Anyway, there's no issue there. Mutual funds, a chapter that we have covered here comprehensively. So I don't see any problem in this particular chapter. So again, this is old wine, new bottle, nothing much to discuss there in mutual funds other than those two additional theory aspects. Now let us come to chapter 8. What is chapter 8? Chapter 8 is derivative. This is an interesting chapter. Let us see what have they done. What have they done here? Derivatives. Let us see. Derivatives is 84 pages in the new syllabus, 62. Oh, 20 pages. That's interesting. Let us see what have they added. They have added, according to me, credit derivatives, real options, derivative mishaps and lessons, commodity, weather, and electricity derivatives. So here you just had some 4 bullet points: forwards, options, swaps, and commodity. Now they have done, gone slightly deeper. So let us see what all is there. This is pretty much same stuff, old stuff. I don't think there is anything different here in the first initial pages. I think the changes come around the time when this all looks pretty much similar. Parties to the option, payoff scenario, long call, short, option valuation. This we have discussed, the binomial, this neutral, Black-Scholes, all of this. I think this is where the new stuff comes, which is Greeks. Yes, we've discussed basic Greeks, so I don't think that is an issue. Exotic versus traditional option. This is something new. Barrier options, binary options, Asian options. Okay, they've explained them again, theoretical aspect, guys. I mean, this is very unfair. They should have actually done a proper explanation of what these options are, how they work, and all of that. Given the payoff charts or payoff diagrams, that would have been helpful. Credit derivatives, again, types are CDO, synthetic CDO. They've added a bunch of stuff. This CDS, main features of CDS. I think they moved this from FSCM paper in CFA, old syllabus. They had some elective for FSCM. I think from there they moved a bunch of stuff. Real options. What is real option? Valuation of real options. They've given a question on real options. This is very interesting. So this is a new topic that has been added. Abandonment option. This is also very good. Where where there is a sunk cost and you leave it and all that. Timing option. When you choose time. Commodity derivatives. Let us see what is there in commodity derivatives. Do we have anything here in commodity derivatives? Binomial. After that, in old syllabus. Commodity derivatives was a very simple thing. Have they added anything new in commodity derivatives? No, I don't think so. They've added just about weather derivatives and electricity derivatives afresh, but and some cases, Orange County case, Bearings Bank case is a famous case, PNG case, then lessons from these mishaps. This is a good aspect, even though this is theoretical, right? Compared to other chapters, I think this theory actually is very relevant. So derivative chapter, old wine plus some small extra tarka, we can say that, some small extra masala. So derivatives chapter, they've added real options, they've added stuff around CDO, CDS, credit derivatives, and case studies. So this is a good addition. If you ask me, this is a very, very good addition. This is overdue, long overdue. So I'm closing this particular derivatives chapter, and now let us come to the next chapter, which is chapter where after derivatives, I think we had Forex, right? If I'm not wrong. Yeah, Forex. So let me take Forex out, and Forex is here as per the new syllabus. It's about 100 pages. And in the old syllabus, Forex is about 90 pages. So they've added 10 pages. Let us see what have they added. Exchange rate determination, foreign currency market, hedging risk, foreign exchange forwards, futures, exchange rate, management of foreign exchange, role of SWIFT. So they've added some, and national international payment gateways. Okay, this is interesting. Factors affecting, no, they've not done. I think they've added some theory here as well. It doesn't look as if that they've gone too deep into what is this? This is role of SWIFT. Okay, role of SWIFT is something new. National international payment gateways is new. Nostro we've discussed, that is the old one only. There's no change there. Quotation, American, Europe, all this looks pretty similar, guys. There's absolutely no change. The SWIFT and payment gateways are the only new stuff. I don't see anything new so far. Exposure types, this is also same old stuff. Matching, netting, this is also pretty much similar. I mean, you can actually scroll through both of them. They're pretty much same. There's hardly any difference. Other than that SWIFT part and the other one, what I was telling, I don't see any other difference so far. Let us see extension, before due date, after due date, all this is fine. This is all the same stuff. And then not NDF, yes, they've talked about NDF even in the previous syllabus, so I don't think there's much there. And then you have something called futures contract and option contracts. Yes, then swaps, strategies. Then they've added something called as popular derivative products. Forward importer. What does a importer do or an exporter do? Benefits and risks. Forward for FX put option. Then IRS US floating to fix. This is something we discussed. This I think I explained in international risk interest rate risk management chapter, which they are not covered. Strategies for exposure management. Yeah, this is same stuff. So other than that aspect of 2-3 new things, which is that SWIFT, then this aspect about FX put options, FX call option, what are the favorite dollar derivative products, and some amount of stuff on interest rate swaps and all that. I don't think there's anything major here. This probably I can say is 80% same. There's not much difference in the old syllabus versus new syllabus for the Forex chapter. So I'm closing the Forex chapter and next moving to the chapter number 10, which is International Financial Management as per old syllabus. And it probably would be chapter 11 from the new syllabus. Let me just check. International Financial Management as per, yes, exactly. Now, international capital budgeting, raising funds, sovereign funds. So they've added 3 things: raising funds, sovereign funds, gift. Raising funds, sovereign funds, gift, and then everything else is same. International sources, I think there's just a name of change in name. Everything else is similar. It was 42 pages, was 37 pages. Let us see what is new. In this, this is all pretty much similar. It is all pretty much similar, nothing. So you guys can scroll through. It is all similar. I remember the chapter pages, which is why I'm scrolling through them faster. There's nothing different here. International sources is also pretty much the same. FCCV. So there's nothing much here. ADR, GDR, and all of that is same. Euro bonds. This is where gift is something new. And sovereign wealth funds, that is something new. Now, benefits of gift, then sovereign funds, sovereign fund, wealth funds. Yes, this again small theory part. Other than that, I don't think there's anything else. See, all of this is how the parent moves cash and all of that. We discussed all of this. There's not much here. It is pretty much the same as for the old syllabus and new syllabus. Rest of the stuff. Let us see the question count. Have they changed any questions? Till 5 questions you have here, and you have how many here? 5. It's pretty much same as. So other than gift and sovereign wealth funds, there's nothing much in international financial chapter 10 old syllabus and chapter 11 in the new syllabus. So there's nothing much there. Now let us come to interest rate risk management as per old syllabus. It is chapter 11, 23 pages. And let us see in this new syllabus, it is chapter 12, it is 26 pages. So only 3 pages increase. What have they done? Interest rate, hedging interest rate, traditional method, modern methods. benchmark rate. So here, guys, if you remember, I was telling you that LIBOR is no longer relevant, and we have some new terms in addition to LIBOR. So SOFR and other stuff. See, SOFR. I was telling you. So SOFR and Sonia. So same stuff. So that was not there in the earlier syllabus. It is there in the new syllabus. You have Tokyo rate, Swiss rate, bunch of that. So they have added those aspects because no longer questions on LIBOR could be given because LIBOR is no longer relevant. Other than that, it is all pretty much same. There is not much of a change here. If you look at it, asset liability management, they still continue to give LIBOR questions. Guys, that's pretty sad actually. So floor option, collars, types of swaps, fixed rate swap, use of swaptions. Yeah, so there's nothing much here. So other than that, you can look at it here. Types of swaps, swaptions, pricing of swaptions. See, it's pretty much the same stuff. Use of swaptions and there's your knowledge. There's nothing much. Other than new benchmark rates, there's nothing new here. And how many questions do they have here? They have about 6, 7, 7. So in the old syllabus, we had how many? 6, 7. Come on, guys. There's no change. This is again old wine in new bottle. There's not much that has come out in terms of the syllabus change in old versus new. It is pretty much the same. Interest rate management chapter. There is nothing much. So let me close this as well. Then coming to next chapter, which is corporate valuation, which is now called as business valuation. Okay, so business valuation, 64 pages old syllabus, and in the new old syllabus is 46 pages, new syllabus is 64 pages. Okay, there is some change here. Let us see what is it. Cash flow based, arriving at fair value, so on and so forth. This is as per the old syllabus. Let us see what is there in the new syllabus. So here, this is where they have made it. Going concern and non-going concern, distressed companies, startups, digital platforms, professional consultancy firms. This is a good stuff and impact of ESG, by the way. This is also a good one. Arriving at fair value till here is what they had in the old syllabus. Now in the new syllabus, they've added these extra stuff. Let us directly go there because I don't think they would have done anything different in other topics. Valuation of going concern and non-going concern. This is again pretty much theoretical. Distress is theoretical. Modified MIRR, modified discounted cash flow. No, it's not an MIRR. It is modified discounted cash flow. I'm sorry for that. DCF plus distress value, adjusted present value, relative valuation, valuation of startups, traditional methods, value drivers, methods, Berkus approach. This is a good one. Cost to duplicate, scorecard, venture capital method. Valuation of digital platforms is pretty good. Income approach, discounting, specific consideration, market approach. This is pretty good, guys. This is the valuation of professional consultancy, impact of ESG. So this is a good development. This particular chapter, corporate valuation or business valuation, there is a good amount of addition there. And I actually appreciate what they have done in this one particular chapter because this is relevant. We were actually studying earlier what was completely irrelevant. These case studies again are useless. I mean, they could have at least changed the case studies, saying that WhatsApp and Vodafone is irrelevant in the context. But nevertheless, let us see the number of questions that they have. The old syllabus, I think we had about 15 questions here, 16 questions. And new syllabus, we have, obviously they'll add new questions. Did they not? Oh, come on. So constant engineering, they've not added new questions on startups and stuff, which is what they were explaining. This is very unfortunate. I actually would have expected them to do something there. But guys, there is a very strong possibility of theoretical as well as practical questions being asked with respect to valuation of distressed companies, startups, and professional and a bunch of other stuff which is there in the new syllabus. Okay, so I think this chapter there is a good development, and I appreciate that. Now let us come to the next chapter, which is M&A. M&A as per old and M&A as per new. M&A as per old, new. This is about 80 pages and 70 pages. There's no difference, guys. There's absolutely no difference. They have done the same stuff. I don't think they've done anything different. Unlocking value. Same stuff. Unlocking value. No, unlocking value is not there. M&A failures. Premium and discount. Financial destruction. So we had something called as premium and discount. Now they had unlocking value through M&A business restructuring. So in this chapter, I don't see anything unlocking. Let us see what is there. Unlocking value. Premium and discount. So I think these both are different aspects, how they unlock value. Premium discount is there here as well, but they've added one new topic called unlocking value, but I don't see anything major there. So this is done. Now let us see how many questions are there in this particular chapter. They've added SPACs. SPACs is a good one. Did we had SPACs earlier? I remember actually discussing one of the chapters about SPACs. SPACs, yes, it is there in the old syllabus. So let us see the question count. Question count is 18, 20, 21, 26. How many questions do we have? We have about 31 questions. And in the new syllabus, we have around 31. Oh, so there's no change. That's odd. They've not added questions. They've just, concluded it, the way it was. Okay, they've added some very small bit and they've not done any change. So M&A chapter is pretty much the same. So there's no change there, guys. M&A chapter, there's no change. Then we have something startup finance. Now, let me open the startup finance in the new syllabus. So startup finance, old syllabus was about 15 pages and new syllabus is about 24 pages. So I guess absolutely they've added stuff. Concept of unicorn, succession planning, this good stuff. So some of the innovative ways, this is old stuff. Pitch presentation. Did they have pitch presentation earlier? I think they had because I remember showing some of the stuff in the class as well. Okay, let us see what else is there. Concept of a unicorn. Yes, this is completely new. This is completely new. Who are all the unicorns and all that? But why do they give the names, guys? Come on, this is not required. Modes of financing is still the same. Advantages of VC, this is still the same. This is still the same. Exit plans. When VC funds in India, this is pretty much the same. I don't think there's anything different there. VC funds in India. So I think that is something that they've added new. There it is pretty much the same. I don't see any difference. High net worth. I think there's some error here also. Anyway, structure of venture capital is pretty much the same. Startup initiative, this is changed. This probably I would have guessed I would have updated it for the latest stuff. Startup initiatives and all of that. Succession planning. Why is there need for succession planning? But I don't know. Why is that relevant in the startup chapter? This is completely dumb. I don't know. Anyway, so there's not much in this chapter as well, other than certain updation. So that is what basically is there in this particular chapters, guys. On an overall basis, right? On an overall basis, I think it is absolutely old wine in new bottle. There is nothing much. It is except for the chapter on advanced capital budgeting. In Forex, they've added a couple of new topics, and in derivatives, they've added a couple of new topics. And of course, security, corporate valuation, or business valuation, they've added new topics. Other than that, there's nothing. So overall basis, it is 80 to 90% same. Probably I would say 85%. Okay, let me put it 85% same, only 15% different. Or you can actually even say 90% same, only 10% is new stuff. Right. So that's the conclusion for SFM versus AFM. 90% same, 10% different, and 10% is easy. Okay, so there ends the comparison of old syllabus versus new syllabus for SFM versus AFM. All the very best. We'll be uploading similar such comparisons for several other chapters. We'll go topic by topic, and we'll give you a very, very clear idea of how you what you should be worried about if there's anything. If there's anything to worry about, we are here to do. Okay, all the very best.